Ricus, we're out of time, so I'm not going to get your take on 91, but I do want your stock pick. You're going with Resilient.
Yeah, it's just based on basically on what we're seeing happening with interest rates. They will benefit almost directly from that, considering their debt levels, first of all. Secondly, if you value them on a price to funds from operation at a pretty decent level, I like their exposure via Lighthouse to Spain, and considering their last results, great increase in annual revisions plus new growth, and they will benefit from lower interest rates. And we've already seen retail stocks running this morning, and they're obviously second in line to benefit from any kind of retail spend.
Gary, you're going with some complexity. You've got about 75 seconds to help us understand it.
So it's not as complex. So it's essentially an autocall. For those that don't know what an autocall is, it's a contingent payoff structure. That sounds complicated, but essentially you're going to get a fixed coupon as long as certain indices are positive. So the three indices that we're linking to are the NASDAQ, the Nikkei, and the Euro stocks. And all we need is these indices to be positive. If they're positive after 1 year, you will get current pricing. We priced this morning, we're going to get just over 15% US dollar coupon. So in 1 year's time, we have an observation. We look at these three indices. If all of them are positive, you get 15% in US dollars. If they're not, we then have semi-annual observations. So every 6 months, we go back and we have a look at this. If all three are positive, we give you essentially 15% or 7 plus 7.5 plus 7.5 plus 7.5 all the way for 5 years. If one of these indices is negative after 5 years, we give you 35% capital protection. So we'll still give you all your money back unless one of the indices has fallen more than 35%. So that's the autocall. Basically, it's kind of a fixed income product. We've done the probabilities. And really, this should call within the first 3 years. The overwhelming probability is that it'll, if you look at back testing, that it'll call in the first 3 years. And you get a coupon that in US dollar terms is probably 50% higher than the S&P 500 average for far less market risk.
Yep, I take your point. That was perfectly described. Makes sense. That's all we have time for tonight. Stockwatch. Thanks to our guests, Ricus Reeders from PSG Hole and One Ruimsig, going with Resilient. Gary Booysen from Rand Swiss with an autocall. Up next, the close. Stay tuned.